This will be one that you guys definitely want to stick around for. We're going to break down why crypto and banks are going head to head and maybe why all of this is happening with the SEC, Chair Gensler, and it will all start to make sense for you guys very soon. My name is Small Baron. Welcome back into Tech Path. Let's get into a couple of topics today around the banks, the fees, and why crypto solves all this stuff. And you'll start to get the picture as you see some of this play out. We've got a few clips for you. Before we get started, I want to thank our sponsor, and that is iTrust Capital. If you guys are looking at doing long-term holding of your crypto assets, one way to do that is through an IRA. And you can do that simply by going over to itrustcapital.com. Join in over there. You can put your Bitcoin in there, your Ethereum in there. If you don't have an IRA, you can start it. If you have one, you can transfer it. So it's very easy to do. No fees for you if you're doing any kind of your activities. If you start trading, small fee, but you manage it all right there within your IRA. So check it out. We'll leave a link down below for you guys to join. You get a $100 funding reward if you decide to use that link. It does help the channel out. All right, so let me jump over to this first article. This is coming in from Bloomberg. Bank of America to pay $250 million over extra fees and some unauthorized cards. So they're starting some shenanigans here. If you look into the article right here, shows a little bit about what they're talking about. Agreed to pay $150 million in fines and $100 million to customers for improperly charging extra fees, withholding rewards, and also opening unauthorized credit card accounts. So this is a lot of similarities to what happened with Wells Fargo. Further in the article, it breaks down some more scenarios. Bank of America wrongfully withheld credit card rewards, double dipped on fees, and then opened accounts without consent. So essentially, you end up with a credit card. It came to you, I guess. I'm not sure how all that occurred, but those fees took place. Then Bank of America charged consumers a $35 overdraft fee and then double dipped by allowing those fees to be charged repeatedly for the same transaction. So that was another problem that came into it. This allowed the bank to generate substantial additional revenue. I'll show you some of that here in the coming slides. And then wrapping up on this, the Consumer Protection Bureau also alleged that dating back to 2012, this goes back a long ways, Bank of America employees opened credit card accounts for customers without their knowledge to reach sales goals imposed upon these workers. So this is a lot of similarities to what happened with Wells Fargo. And then lastly, they also held the promised cash reward or bonus points earned by tens of thousands of customers when signing up for Bank of America credit cards. So big problem where it goes. I think this is just one of those scenarios that it just shows you why the value of crypto has become such a mainstream topic. I want to jump over to this first clip that explains how some of these junk fees actually work.
There's a growing concern that banks and other financial companies seem to be making these junk fees, like overdraft fees, part of their core business model. They often charge these fees to feed their bottom line, even if people aren't really getting anything in return. Because these fees aren't included in the sticker price, people don't have a meaningful way to shop around for services based on price. These junk fees can undermine competition and have serious ripple effects on people's finances.
All right, so junk fees have been in the industry for quite some time in the banking business. I think everybody has been and had, these NSF fees come in. Let's look at how many are actually coming in. Here is some research here from Consumer Finance. This is a government agency that tracks all this stuff. Change in overdraft NSF fees for the year 2022 versus the pre-pandemic. This is 2019 going back in here. These are the number of banks that were looked at. And if you look at these right here, we'll go up to Bank of America right there. Okay, group revenue around 392 mil coming in. All these 8 banks around 4.4 billion. Then you look at the total around 7.6 billion in fees of just these banks. That's 7.6 billion in fees. Now this is where I can see now why the banking industry is fighting crypto tooth and nail, because crypto solves a lot of these problems where these fees come in. It eliminates a lot of these kind of things in its entirety. So I'm going to get into a lot of clips here, a few clips that will break these down. Let's go to the first clip on deposit fees.
Meet Alex. It's payday, and he just received his paycheck. But when Alex goes to deposit it, something unexpected happens. It bounces. Not only does Alex not have access to his paycheck, but some banks may also charge a fee. Alex can't control whether his employer's check would clear. Why should he have to pay for their mistake?
All right, so deposit fees, we've already seen a lot of those. That's not the only fees out there. Let's go to this next. This is overdraft fees, just so you understand the dynamic here.
Meet Jordan. Jordan has $100 in her account and purchases groceries with her debit card for $50. When the payment clears, the bank charged her an overdraft fee. Why? What Jordan doesn't see are complicated payment processing practices on the back end. Jordan's bank is charging a fee, sometimes multiple overlapping fees, even though it appears to her like she has the money in her account at the time she makes the purchase. If someone's account balance shows they have enough money for a purchase, payments should go through without a fee. Payment processing policies and overlapping charges on different timelines should not change that.
All right, so you get the picture. There's a lot of fees. They continue. You saw the 8 banks generating $7 billion just in NSF fees. You see all these other. We're probably talking anywhere between $10 and $20 billion for 8 banks. This is just in fees, okay, that we know of. Likelihood, there's all these hidden fees, a lot of additional marker fees, all sorts of things that happen within the banking ecosystem. I want to jump to this third or fourth clip on President Biden talking about fees. Listen in.
These hidden charges that companies sneak into your bill, I think it's just wrong. My administration has also taken a number of steps to crack down on junk fees by reducing overdrafts by $5.5 billion a year and bounce checks costs by another $2 billion a year. That's real money. This is a win for consumers, in my view, and proof that our crackdown on junk fees has real momentum.
All right, so I mean, okay, yeah, maybe there is a little bit of that happening, but for us to be able to generate in 2022, Biden was president that year, almost $10 billion in these NSF fees. Imagine what these things, and it said that they were, greater than that of pre-pandemic. So I'm not sure where those numbers are coming from, but again, these fees are out of control, and I think the banking system is just, clawing at this tooth and nail. And the fact that they're doing all these, shenanigans of getting people to get into accounts, credit cards, things of that nature, where it just generates more fees is one of the biggest problems out there. This fourth clip gets into lawyers and how they translate fees. Listen in.
Several law firms have gotten together and they've actually launched an investigation to find out just how badly American consumers are getting screwed over and what legal recourse they may have.
So the attorneys that we're working with here, the different law firms, they're taking a look, and they would love for viewers to send in their receipts, their contracts that show these fees. We have a $1.99 administrative fee that AT&T charges wireless customers, and MarketWatch said that that $1.99 fee will give AT&T $800 million in additional revenue.
Because it's not just AT&T. I mean, you guys at Top Class Action, you have this massive list here of industries that are doing this: live entertainment, sporting events, utility companies, credit cards, car purchases, hotels, air travel, car rental, investment services, mortgage services, insurance services, homeowners associations, condo associations, apartments, city governments, retirement services. It seems like everybody's getting in on the hidden fee thing. That's part of the problem. The other problem is that you obviously do have places in this country where that's actually illegal.
They try to go ahead and put down there. A lot of times they put it down there under the taxes. And so it looks like it's a state, city, local, or federal tax, but it's not. It's a fee that's going straight back into the company's pockets.
All right, so maybe you found this video today thinking banking topic, you wanted to learn more about this. Really what it does is it shows just how subversive the banking industry is and why the opportunity here for crypto, for blockchain, will begin to change the game. And it's going to change it in a lot of different ways. Here's one example. This is Argentinian Airline becoming the first to offer tickets as NFTs on Algorand. If you don't know anything about Algorand, go do some research. Just look up Algorand. You'll find a guy by the name of Silvio Micali. He's the founder, a Turing Award winner. That's basically a computer genius. These are the kind of companies that are developing these kinds of projects. And further into this one, Argentina became the first in its field to launch flight tickets in the form of NFTs. Let's jump over there to their NFT ticketing. This is on TravelLX, just to show you an example of the evolution of the ticket. from all the way back in the 1950s to where we are now. We're at this kind of thing. You see that Southwest barcode. Let me zoom in on that a little bit for you. You probably recognize those. But when we get into blockchain adoption, and now in 2022, now we have the capability of integration into a digital token, an NFT, getting a fully transparent on all fees, and then exchangeable via blockchain delivery, and then having the capacity to really see everything that's happening within any of these kind of services. So what it does do is it won't necessarily eliminate the need for fees, because there will always be ways for these companies to figure out a way to charge these fees, but it will at least make them transparent. And that's where smart contracts really change the game, especially in the NFT world. This is what I think is going to change the future of where not only technology is going from a blockchain standpoint, but a lot of the fees and services. Remember, these class action attorneys, we're talking about AT&T. Obviously, we see this in the airline industry, and then banking, obviously, I think is the biggest culprit of this. Here was an article here from Algorand themselves, and they were kind of breaking down. This is likely representing the largest use case, talking about these tickets, use case of utility for NFTs we've seen, and something that could only happen with the reliability and scalability of an Algorand blockchain. This coming from Stacy Warden, the CEO of Algorand Foundation. We've had the Algorand team on here before, but the point is that projects like what TravelX is doing is opening up people's eyes to where these fees are coming from. And when you look at just the amount of violations that are happening, and we've showed this here on the show before, I'm going to go over to this violation tracker. It shows the current top 10 banks here, or parent companies. B of A right there at the top, as you can see, 87 billion in penalties at 313 records. Further in here, this is the thing that's going to really upset you. And you can kind of see here's City National Bank, Royal Bank of Canada, there's Coinbase. We'll further into here, you can kind of see there's Freddie Mac, Liberty Insurance, etc. Now, notice over here, let me zoom out a little bit here, and I'll show you. Most of these are like insurance violations, discriminatory practices. These are all fees, 31 million. Guess what? Coinbase gets a $100 million fee and penalty for anti-money laundering deficiencies. So what is that? And why are they getting hit so hard when you compare to most of these fines? They're all in the 20 to 60 to 80. There's a big one. But the point is that why is the crypto markets being basically pushed on so much harder in that? And I think, again, this goes back to the point of banking versus crypto. And that's what we're facing right now. It's going to be a big, big issue going forward. And I think the real cool thing is that people are starting to wake up to this. They're starting to understand why this is happening. And now they're starting to put the pieces of the puzzle together. Here's an example. This is coming from American banker. SEC Gensler directly links crypto and bank failures. He is tied to the banking industry. That's why I feel like we're seeing so much resistance here on the SEC allowing crypto when the rest of the world is moving at light speed to get this thing going. We here in the United States are dealing with, of course, Mr. Gary Gensler and his friends over at these banking authorities. So again, if you guys are watching or listening into this, maybe on the podcast side of things, jump over to the YouTube channel. This is where we break down some of these types of videos to give you a lot more awareness on this. The best thing you can do is subscribe to the channel. Make sure and like this video, because it is one of the ways that this is going to get out there, and it's going to be shared with others and make it into the YouTube algorithm to help others learn about what's happening here and why crypto is really the solution that starts to fix a lot of this problem. If you're not part of our Diamond Circle, make sure and jump in on that. It is our email and also our additional content engine where we put out additional content over there, another podcast, additional TA analysis, all sorts of things that we don't do here on the YouTube channel. If you guys want to catch me, it's out there on Twitter, @Paul Barron. We'll catch you next time right here on TechPath.